Today, we're going to talk about why investing in cash or money market funds over the long term could be a tragedy and potentially disastrous to your family's wealth plan, assuming that you, of course, have a family wealth plan. If you're a client, you certainly do. If you're in cash today, you are losing ground because your net real return after inflation and taxes is actually negative. If you back current inflation and taxes, which are about to go up at the end of 2025, out of the returns of cash, you are backing up. Your money is bleeding into the carpet and going backwards. And you might be telling yourself, by the way, this is a rational investment strategy. It is not. I recently had a wonderful, longtime client, a retired engineer from DuPont Corporation, ask me, with cash now paying a healthy 4 or 5% yield, should I sell my stock market investments and simply invest in cash because it's safe, quote unquote? Let's start by redefining safety, because to me, in our view, the only safety that I know of is the protection of your money. And the only long-term definition of money that we understand is basically purchasing power, or how much can your money actually buy? What sense does it make to fix the number of units of the currency if the currency is losing its value at 3% compound every year to inflation? We are planning for a 30-year retirement, or we're not. That means that I'm trying to plan, and I hope that you're trying to plan, for an income that fights off rising living costs for an average of 30 years. Historically, the only asset class that has outpaced inflation consistently over time is owning the great companies of America and the world via owning the stock market. If history is any guide, and it's the only guide that we have, over the long run, stocks will outpace bonds, bonds will outpace cash. Over the last 50 years to the end of 2022, to double your initial investment in cash, it took approximately 17 years. In bonds, it took you about 11 years. And in stocks, about 7 years. Yes, you have to sit through a down year in the stock market every 4 or 5 years. But if we know that winter is always coming, we can't be surprised when we look outside and see snow. That's what's always going to happen. Volatility is the emotional price that we all pay to create wealth over time. We are not told in advance, by the way, there's going to be a little bit of rain or a hurricane. But we know going in that volatility is going to be the price of admission. At Brandywine Oak, we certainly keep cash positions for our clients, but we ensure not to over-allocate to a losing asset class.